Alright traders, welcome to my channel once again. I want to take few of your time to explain what I called old high and old low. This is part of the institutional reference point. The institution make use of this to enter their trades, to make an informed trading decision, and you can actually leverage or take advantage of this. So let's start. So what is an old high and old low? An old high or old low is that area on the chart. It's that swing high or a swing low that price had moved away from a long time ago. It might be an interval of a week, it might be an interval of um a month or a year or over or lesser than that, but is an area, a swing area, either swing high or a swing low, where price had left or price have moved away from long time ago. And this is an example of it. Let's say for instance this is an old high, then price move from there 6 months ago or 3 weeks ago or 2 weeks ago or 1 month ago, and then price created another low, and then price continued to move and then created another. Yes, now this is an old high, and this is an old low. This is an old high and this is an old low. Let's say for instance price moved from here a month ago. It becomes a very strong area that whenever price comes there, price is going to react. It's actually going to make price to reverse to the opposite direction. Let's say this is the old high, and the next time price comes there, you are going to see price do something of this and then goes back to the downside. The same thing, the old low is going to make price to go back to the upside. That is it. So what you want to do is that you want to look for confirmation around here on a lower time frame and then ride with the movement. And the same thing applicable to the downside. You want to look for a confirmation here and then ride with the movement to the upside. That is it, guys. It is not hard. That's just it.